Hello and welcome to FinTech Finance's Virtual Arena. I'm your host, Doug McKenzie, and on today's session, we're going to be looking at the opportunities for wealth management firms when it comes to digitization. And joining on today's podcast is David Semmens, the Chief Investment Officer over at Wealthify. David, how are you doing here today?
I'm doing well, thanks, Doug. How are you?
I'm absolutely brilliant, really ready to crack on to quite an exciting topic. And also, David, for our audience who might not be aware, could you tell them a bit about yourself, your role, and Wealthify, please?
Certainly. So I'm the CIO over at Wealthify, which means I pick where everyone's money goes. Our office is in Cardiff. We're one of the leading robo-advisors, and we're the only one in the UK based outside of London, although I'm actually up in Edinburgh. Our customers tend to be perhaps a bit younger. On average, we've got around 1/3 of our customers are women, and one of our USPs is you can start investing from £1, and we've got original and ethical portfolios.
That's absolutely incredible. I think that role is going to be quite a significant conversation piece in today's podcast, so thank you so much for joining. And also joining today is Peter-Jan de Venn, the Strategy Director over at Mobikity. Peter-Jan, thank you so much for joining as well. How are you doing?
Yeah, excited to join today. How are you?
Yeah, really, really good. Thank you so much, Peter-Jan. And also, could you tell our audience who might not be aware a bit more about Mobiquity and what you do there, please?
Of course, yes. Mobikity is a global consultancy firm. We blend strategy, engineering, and creativity to deliver meaningful solutions to our clients. And as I said, we do that globally with 1,200 people, but we're also part of the Hexaware family. 1,000 additional colleagues to make sure that we not can only advise our clients, but also actually deliver digital solutions to them.
That's absolutely, and that's going to, that's also going to be pivotal. Hearing about how your expertise can enable that for organisations, and hearing some of the anecdotes I'm sure you have about that journey is going to be so amazing. So thank you. And lastly, but not least, we have John Wilson, the Managing Director for the UK and Ireland over at Avaloq. Thank you so much, John, for joining us here today. How are you doing as well?
Very well indeed. Thank you very much, Doug, and thanks for having me with you today.
It's our pleasure. Now, John, could you tell our audience as well, if they haven't heard of Avaloq already, a bit more about Avaloq, please?
Happy to. So, Avaloq is one of the world's leading suppliers of banking and wealth management software and services. We are a Swiss company headquartered out of Zurich, and you may be aware we were recently acquired by the Japanese technology firm NEC at the back end of last year. Which makes for all sorts of exciting possibilities in terms of leveraging their technologies and balance sheet in terms of promoting and pushing Avaloq forward into the wider and big exciting global world of wealth management and banking software. We are about 2,500 people strong, and we operate in all regions other than the US right now. We're very strong in Switzerland, as you would expect, because that's our home ground. And we've made great strides through the UK, through EMEA, and also in APAC as well, which is a rapidly growing environment. We're excited to carry on promoting our Avaloq core platform software, which we now deploy in on-premise, SaaS and BPaaS, as well as promoting our exciting range of new standalone digital products, which are targeted on they're non-core agnostic. They're core agnostic products, basically, which means that clients who haven't necessarily been in a position to invest in the Avaloq core platform can now use our digital technologies.
Oh, that's incredible. And hearing how that kind of being at the heart of all of a wealth management company's technology and being able to offer all that different kind of bespoke offerings is going to be so exciting to hear, because what I think we're going to be getting out of this is how agility is going to be quite pivotal. So yeah, hearing about that's going to be very exciting. Now, John, I am actually going to stick with you for the first question, and that's really to kind of get an understanding of the question for our audience who might just be joining. I want to know, what have traditionally been the key KPIs for a successful wealth management firm pre-COVID, and if they've changed over the last 2 years?
Well, traditionally, the main KPIs have been measured in terms of, I guess, what you'd expect. So assets under management, inflows and outflows, how those assets are split across advisory, discretionary and EXO transaction models, and also the asset class breakdown within them. Clearly, returns on those assets are important for the wealth manager and the wealth manager's clients, importantly. Cost to serve, with the pressure on margins, has always been a key and traditional management metric, as have number of customers, number of transactions, and clearly revenues and margin. Now, I would say, interestingly, despite the fact that the world has changed a lot over the last couple of years, as we're all aware, the way wealth managers measure them success has remained relatively static during that time, and that's not a criticism. I think it's just a fact that kind of the axioms by which we live and measure ourselves haven't necessarily changed. What has happened is the circumstances change around us. So therefore, what we've seen, I think, are greater extremes within some of those measures. So, significant growth in trade volumes as the pandemic has driven volatility, and also growth in IT spend as firms drive digital transformation, engagement, and efficiencies. What I would say as well is that the impact of the pandemic has been to change risk profiles in the way in which companies have adapted over lockdown. So particularly looking at how new technology has enabled them to engage with their clients. And I would say for any wealth manager looking to measure themselves over the last couple of years, if they can say that they've managed to fully integrate their technology in order to maintain client relationships, then wealth managers will see that as a success metric. COVID-19 has certainly accelerated the focus on best of breed technologies and the ability to deliver seamless multi-channel service propositions to clients.
Yeah, now with that in mind, Peter-Jan, I've got to come to you as well and get your perspective. Do you agree with John there? Do you think that acceleration, especially on the tech side, has become almost critical?
Yes, no, definitely. And actually, I would like to add one KPI that was also touched briefly already. It's customer satisfaction, right? And for this customer satisfaction, customer servicing is really important. And as we all know, that customer servicing is one of the key differentiators for wealth managers. And becoming digital and the acceleration that we have seen, of course, due to COVID is key for that, key for getting that customer experience also to the next level. And we have actually also done research lately that actually showed that one of the key success factors that wealth managers see themselves is also keeping up with those customer demands, right? And those customer demands have shifted again, also due to COVID. It has been more clear that digital is also very important in the way of communication. For a traditional, more face-to-face, advice-heavy business, that's a huge step forward, I would say.
Yeah, I really do see that the industry itself is starting to, as you say, look at those demands at a time when the demands themselves have shifted immensely. And I think it's going to create some really exciting prospects there. Now, following on from that, David, looking at the customers, if we continue on from Peter-Jan's train of thought, how have the customer demands changed in the last 18 months? Because, it's all right now having to focus on them, but if they've changed so much, what are some of the biggest outliers you've seen over the last 18 months?
Well, one of the things is that people's demand for investment has definitely risen during COVID. You had a lot of people with forced savings because they weren't able to go out and spend. At the same time, you had the various furlough schemes or unemployment benefits, as you saw in the US. So people were still getting paid on the whole. And so people were either using that to invest, which is obviously looking longer term, or you had those speculating, as you saw with GameStop earlier this year. But I think, as John said, it's getting out there and engaging digitally. And we're a digital-only business, so we can be accessed via our app or via our website. So we don't rely on face-to-face interaction. And one of the things that we offer is partnerships with wealth managers. So we've got a partnership with LGT Vestra, and this is to allow them to service some of their smaller clients and engage with the next generation who maybe don't have the capital at the moment to warrant the costs and the expense of advice, but allows them to retain those customers who come to them and say, well, I'm interested in you as a business. And they say, well, actually, we've got this great solution. It's not then going to require excessive fees. And it just allows you to strip out the advice and do it at a much lower cost, which is obviously attractive to people. And similarly, instead of getting your statements through the post maybe every 6 months or once a year, as would have been the case 25 years ago, people now want to be able to check their balance every day on the app. And I think that's one of the things that we really aim for. So it's sort of the accessibility, having a good product journey, being able to get into the plans, the affordability. So as I said, we can start from £1, but we're also only 60 basis points. and then advocacy. So it's the customer service. So both the other gentlemen have touched on how you have to be making people happy, and we've got a market-leading Trustpilot score, and people are very quick to complain. So I think people can put a lot of faith in those, and that's something that we pay a lot of attention to, because when that starts to slip, it makes your referrals harder as well. And I think it's the same in business as it is for the consumer world.
Yeah, well, with that in mind, I mean, that sounds absolutely incredible and almost groundbreaking for the industry. And John, obviously Avaloq, as you said, your home turf is Switzerland. I'm really interested to draw out if there's any comparisons, any similarities with the customer demands between that. I know you're managing the UK side of things, but do you have any insight into that? And do you think it's the whole of Europe is moving in a similar direction there?
I think in many ways the customer demands in Switzerland are the same as those in the UK, or the same as those in APAC, which is, I'm assuming you're talking about our client end customers, or
yes.
Are we talking about, so yes, I think the demands of the end customer are those of good return on investments, as Peter said, excellent client service, and as David said, innovative investment propositions. I think what does differ on a geography by geography basis is sometimes level of comfort with digital technologies, and the split between whether face-to-face or digital and kind of virtual interaction is preferred or acceptable. And I think when you look at the UK in particular, I think we have a particularly digitally savvy population here in terms of penetration of mobile phones, take-up, which I think is in kind of the 80 or 90% bracket, take-up of e-banking, which is in the kind of the 70 to 80% bracket, and there's a lot of comfort with being relatively self-directed with your investments as well. So, hence the growth of D2C platforms. So, I think where perhaps maybe in Switzerland you see a lot of the kind of private banking and discretionary fund management and advisory activity, I think what we're seeing here in the UK is a growth in D2C and self-directed investment, which is, I guess, a kind of a slight nuance between the two.
Interesting. And Peter-Jan, if I could also come to you and ask really if the industry is based on that kind of face-to-face kind of contact that John was mentioning at the beginning of his answer, what are the immediate returns on investment for a wealth management firm when they're looking to invest in a digital transformation journey, especially, as I was just saying, when face-to-face has typically been so important?
Yeah, well, let's maybe look in general first, right? Digital transformation, automation typically leads to three, let's say, important results. One is that it improves the customer experience, of course. If the servicing goes up, there's more insight, you can do more yourself, customer satisfaction or customer experience goes up. The second one, it was also touched, is that operational costs typically go down. If you do it right, of course. Client servicing will become cheaper per client. And the third one, I think a very important one in the banking industry anyway, and maybe specifically for wealth management, it's heavily regulated. Digitization, automation leads to more control, because you get more auditable, more traceable, whatever you do, what your clients do, what your wealth managers do, and that makes also regulators happy, right? So the clients get happy, the company gets happy because costs go down, regulators are happy because there's more control. And I think those are typically always the immediate returns on digital transformation.
Yeah. Now, with that in mind, then, David, if I could come to you as Wealthify, being this is almost digitally native, if I'm correct, then what were some of the benefits you saw at Wealthify from having that digital core that maybe some other organisations were almost envious of your position in the industry?
There's a real ease for customers to access us. Obviously, you can do it all online. As I said, people want to be able to see their investments at the sort of touch of a button. But I think also you have to have people behind that. So if they want to get in touch with you, you need to have that underpinning. I think there are some options where you have to do a chat and you go back and forth, and they maybe come back to you, say, 18 hours later, which unfortunately people don't want that. People want to be able to access a person straight away, particularly if, as it was in the first lockdown, we were all sort of just sat there, unfortunately, at home. But I think it's also being able to differentiate yourself within the space. So one of the things is we've got an ESG product. We've been running that for 3.5 years now. It's got some of the strictest exclusions, and we use active funds in that. So within that, it's having just sort of a niche, because there are obviously other robos in the way that there are other investment companies, etc. But it's having that and being able to say, well, that's our niche. If this is what you're looking for, you should come to us for that. And obviously, digitally, it's engaging with people online, and again, people were stuck at home. So it's sort of having the blogs and the internet behind that. But I think it's also, from our end, one of the things we try to do is make it accessible to people who haven't been investing previously, which is, again, that was a big component of people who moved from savers to investors over the last 18 months. And doing that without jargon in all of the media, again, takes a lot more work. It's that thing about it's difficult to write a short, simple letter. It takes the time. And so that's, again, a lot of focus that we put into that.
Interesting. Now, it's brilliant. What I'm seeing to here is obviously for a bank to make any kinds of profit, you've got to reduce risk, gain new businesses. So it sounds like the digitization journeys and the technology behind it is reducing risk from the compliance side of things, but also in your instance, David, opening up a whole new market of people who previously weren't investing. So that sounds like an incredible boon. Now, I'm going to have a follow-up question here because Peter-Jan, as I was researching the topic and as you brought up, I actually saw your report, The Digital Opportunity for Global Wealth Management. And one thing that really stood out to me was, despite the majority of wealth managers citing clear benefits from digital technologies, I think the number was over 20% say that they aren't planning to use digital technologies in the future. And that, to me, that number is huge. That's crazy. So why do you think that the opportunity from some of the opportunities you've just mentioned, you both mentioned, of digitizing is not yet being fully utilized?
Yeah, that was also remarkable, of course, when I read the report and the outcomes of it. But I think it is as always with change, it takes time, right? Rome also wasn't built in one day, so the move gradually goes on. So my hunch is let's maybe first look positive. 80% says they will, right? Yeah. Just 20% that says that they don't plan to use the technologies that they have adopted during the COVID period to use them also in the future. And my hunch is that those might be, there's also the more traditional wealth managers. There's also the ones who serve the more traditional customer, and they might not see the immediate need for those tools. So, which is, I think, somewhere also logically, but it's a matter of time, of course, but also the people at the relatively high age, which might be less tech savvy, they will also become more tech savvy, or the world moves to a new generation, right? And then necessarily you have to make sure that you are also ready for the future generation to serve it in the digital way that they demand.
Interesting, yeah, and it is an evolutionary process, and it is obviously, I think, one of the words that came up at the beginning of the conversation was accelerate, and it definitely, I know it is a slow process, but it does seem to be exponentially increasing. Now, with that in mind, John, I'm really interested to kind of hear what are some of the human-centric digital technologies that wealth management firms you think they should be looking to incorporate and that maybe Avaloq can provide?
So I think first and foremost, I think wealth management is a combination of that face-to-face. That it's a relationship business and it's a service business. So without a doubt, there's always going to be not just human centricity in terms of digital design. There's going to be human centricity at the core of it anyway, whether it's delivered face-to-face or not. But as Peter was saying, with 80% of wealth managers confirming their commitment to digital, then we need to manage that transition, or that ongoing transition into the digital age quite sensitively from a human perspective. So with regard to human centricity, what we do at Avaloq is prioritize persona-based design thinking. So whether we're looking at our core product or whether we're looking at our standalone digital products, we start from the perspective of the end user or the end client. we go from the end client and relationship manager or IFA at the front, then through the remainder of the front, middle and back office, and up to the key personas that exist in those, whether they are ops personnel, risk personnel, compliance personnel, to make sure that we are looking at our products and looking through the user experience through their eyes. We're also seeing, because of the reliance on a kind of a hybrid and virtual approach, as well as the reliance on the common or garden, video meeting technologies, Zoom and Teams, etc. We're also seeing, I guess, a hypothesis that quantity time is quality time. So, if you as a relationship manager want to be front of mind with your clients, then you have to be, you have to be engaging with them. You have to be having dialogue with them. And I think in many ways, the transition to a digital environment makes that easier if you're supported by the right technologies. Now, what we see is an uptick in what we call conversational banking. And that means being able to have an ongoing dialogue with your client in a digital way. And how do we communicate with each other outside of the world of work? It's typically with instant messaging apps, WeChat or WhatsApp, etc. So what we did at Avaloq was we developed a standalone digital product called Engage, which effectively is WhatsApp for the relationship manager. Now, WhatsApp is typically not a compliant technology in the world of investment banking, private banking, wealth management. So what we did was we constructed a product where you could use WhatsApp or WeChat, depending on the preferred model of your end client, and support that within kind of the compliant environment of your company, with the backup of customer relationship management, customer lifecycle management, access to your client's portfolio details, and in such a way be able to have an active, ongoing, unintrusive dialogue with your client, which at the same time put you kind of very much kind of front of mind, kind of on a regular basis, allowing you to offer insights, but also kind of capitalize on what to be your kind of key events in your client's life. So it just helps. It's a very, it's, as you say, a human-centric design thinking. So it's kind of that lovely merge of digital and kind of client centricity in one.
Yeah. And I mean, I think that's just an incredible offering, because I was on another panel earlier last week, and we came to the conclusion that ultimately the ultimate goal is for everyone to have their own personal CFO when it comes to the digitization of banking. And it sounds like we are actually getting to that point already. So that's absolutely incredible. And David, just to kind of wrap up this question individually, I know you've already presented us with a lot of really interesting products that you guys at Wealthify have already been working on, but what do you think might be coming out when it comes to human-centric digital technologies as well?
Well, I mean, I think we use our own CRM chat channel. We don't use WhatsApp, unfortunately, but I think it's that's personalization of service. So I think looking ahead, what customers are going to want is to be able to increasingly personalize or impose their choices on the service. So when you come to us or one of the other fund managers, they will offer you, they'll ask you, do you want an original plan or an ethical plan, and you'll pick that, and then you'll get your risk bucket. But going forward, you'll be able to personalize that even more. And I think that's really what customers want to do. And it's making sure that you can communicate that to customers simply and without using jargon, which is obviously takes time, as I said, but it's also allowing the customers to just interact with you on that, which they do. They're very interested in it. Customers want to know what's in their plans. Customers want to know what their holdings are. And I think, again, it's just going to be an ever increasing amount of information going forward, which is what customers ultimately want.
That's absolutely brilliant. And as John was saying as well, we are seeing that kind of self-guided investment approach. And I think, you give customers the data and they will actually really appreciate it. And I think that's going to be so incredible. Just that added visibility is going to be brilliant, and maybe help replace that face-to-face experience that has been so typical in the industry. Now, with that in mind, then Peter-Jan, apart from having that reliance of that face-to-face in-person experience, what have traditionally been the barriers for maybe some of the traditional wealth management firms to adopt this digital transformation journey? We've been hearing some incredible products and services that you yourself has brought up, David and John have also brought up. What's been holding the industry back?
Yeah, we've actually also looked at that in the research that we did, and what we see, it varies a little bit across regions. So it might also be cultural impact or the state of technology in a certain region. But if we look, what are the key barriers that were mentioned? It was the technical issues, speed of implementations, and if you ask me, those two are related towards having still legacy technology in your company. If you have legacy technology, it is hard to quickly adapt, right? If you compare that to having a composable banking architecture where you can easily access the fintech ecosystem, build new value proposition very quickly, also close them down if they don't work. That's a completely different approach. And another barrier that we also saw in all regions was privacy concerns. And if I think about the personalization that we were just discussing, having a good personalized digital offering requires data, access to data, as much as data as you can get, right? And then you run, of course, also into privacy boundaries. And I think that's also why those barriers are there. But that's about regulation. But if it's about technology, I think it's important for those wealth management companies to actually take that step, go through the digital transformation, change the architecture from the bottom up, use more modern technology, because that makes you future-proof. If one of the key concerns is keeping up with customer demands, I would say, make sure that you can become flexible, and that requires a flexible architecture too.
Now, yeah, speaking of that flexible architecture, John, I'm also really interested in maybe maybe if you've had some resistance yourself here, why do you think the industry has it purely been regulatory, or has it been just the legacy infrastructure that's been holding the movement back?
I would say, where there's resistance, it typically revolves around the key themes of cost, risk, and complexity. The cost of adopting technologies is not inconsequential, because, as you say, you have that legacy barrier. There's always the risk that, with complexity comes overrun in terms of implementation, and then you start getting into, the kind of challenges around kind of return on investment. If all of a sudden your implementation costs more than you anticipated it would, takes longer to implement, therefore you're delayed in terms of realizing the benefits, then those are all the worries that that any sensible wealth manager or private banker is going to be cognizant of before they embark on some kind of transformative journey, because the clue's in the name, it's transformational. What I would say in those sorts of instances is, Avaloq's breadth of experience and expertise is well placed to help firms, because what we try and do is lift the burden of complexity. We haven't started a project that we haven't reached a successful conclusion with. And then, as I said, I think at the beginning of the session, that our ability to either deploy on-premise SaaS or BPaaS, including a hybrid BPaaS, means that we can navigate around, or work with customers to deploy an instance in a way that they would have it, and adapt our approach to meet their requirements and risk tolerance. But risk tolerance is always the factor that is the hurdle that any technology vendor needs to get over with a client before getting into an implementation and use of the technology.
Definitely. Now, with that in mind, Peter-Jan, John was saying how obviously with having a full-on discussion about the risk management and sitting down and being able to kind of maneuver around that is probably how we're starting to see this transformation journey starting to take off. Would you agree? Do you think that the barriers are starting to be broken down? Is the industry generally waking up to the need to a digital approach? I know we talked about those 20% earlier, but is that number dwindling?
Oh yeah, definitely. That's why I would like to refer again to the 80% that actually, due to COVID, understood that digital is also important, also for their segment. Traditionally, what we always see is that innovation starts in retail banking, moves to SME banking, and then it moves towards the more advice-heavy segments like wealth management or corporate banking. So it anyway. It takes time, right? But now it's the time also for wealth managers, and technology has evolved. There's so many fintech out there that can take bits and pieces of a full, let's say, a business process. So you don't have to do it all yourself. But again, the legacy might prevent you from doing it. So it's a matter of taking the right decisions, moving towards this new architecture, and make yourself future-proof.
Absolutely brilliant, and I'm really interested about that future-proof element, because it does seem like the customer demands, especially in the 18 months, are increasing exponentially almost, and so to be able to keep ahead of that technological change and the cultural change within the industry is going to be so important. Now, guys, we've got to start wrapping up here because of time. But if I could come to you each individually and kind of ask you a question about where we can find out more about you and where you think the industry is going. David, if I could kick off with you, I mean, where can people find out more about what you guys have been working on, and where do you think we'll start seeing the industry going in the next couple of years?
Sure. So you can find us on the App Store, Google Play. You can Google us or use whichever search engine that you wish to. As I said, I think it's going to be all about the personalization. I mean, I think touching on what Peter-Jan and John was saying, it's also you have those big asset managers or wealth manager providers. As I said, sort of LGT is just the example that I've got, because we've recently put out a deal with us, and they come to the robos because we've already got a proposition that they can have, they can brand it, do what they like with it, and we can already offer those sorts of services. And it's obviously not just going to be us. And I think that's great because it gets more people involved in investing, and ultimately you want to make the pie bigger. And I think that's the change that we're probably going to see, particularly in Europe compared to, say, the US, is that people get more interested in that going forward. I think there's been a reasonable take-up, which has been speculation and sort of the short-term investing. And I think that's going to be sort of something that's going to be very interesting going forward. And ultimately, hopefully, it's just that the app's becoming increasingly easier for people to use and just becoming more accessible.
And I think that's really what I've garnered from your input in the conversation. It's just how important accessibility is going to be going forward, and that is really an opportunity, a digital opportunity for wealth managers to take advantage of. And John, can I get your parting words on where you think the industry is heading as well, and also where more people can find out about Avaloq and yourself?
So last question first, perhaps, and find out more about Avaloq, avaloq.com, and any one of my team and broader Avaloq community would be very pleased to have a conversation with anyone who gets in touch. In terms of where we see things going, it's really around innovation, integration, digitization. Those are key themes for us, and we are consistently working to flex and refine our products to carry on to deliver the benefits that our clients have come to expect from us in terms of straight-through processing and efficiencies, and make them as supportive as possible to the key personas in the front, middle, and back office. So that's what we're focused on.
I mean, that's such a holistic approach, and I think it's just going to be so imperative to offer up that ability to innovate and be flexible at the same time. So, John, thank you so much as well for partaking in the conversation. Lastly, Peter-Jan, thank you so much as well. I'd love to hear your perspective as well, and maybe where people can find the report we've mentioned in the chat, and also where you think the industry's headed.
Okay, yeah. First of all, you can find more about Mobikity on Mobikity.com, and of course all the channels, the regular ones. We will also share the report soon on our social channels. And if you ask me where the industry is going, I think what is key and what is actually happening is really listen to your customer demands. I think it was touched that keeping up with those customer demands is one of the the key things for the industry. They say it themselves. So I would advise, listen to those customers demands. That's all about desirability. Listen to your customer, but also make sure that you look at technical feasibility and viability if you go for your digital transformation project, because it is key that indeed you have a business case that is actually working, and that is also where we come in. We have the right skills to combine the viewpoint from engineering, from strategy, but also from a customer point of view, and that's how we build those solutions that are really close to customers' hearts. And I think that's really important in any industry, and especially in wealth management, where personalization and servicing is so important. So I think that's very important to keep in mind.
Definitely, it's such a personal industry vertical within finance, as we've already discussed, and being able to carry that over to the digital world doesn't mean any loss of personalization. In fact, it means the opposite. There can be even more. So guys, I've got to say a big thank you for joining us here today, and also to our viewers as well. You can catch the rest of the series and much more over at www.ffnews.com, and of course YouTube, and especially LinkedIn, where I will see you in the comments. Guys, John, David and Peter-Jan, thank you once again. Have a great day and goodbye.